Mercado Libre operates in many fields in South America. It is not only commerce, it is also fintech. And while the PE might look relatively high at 47, the price to free cash flow is sitting at 16. So let's see if this stock is a buy right now. Now let's first look at the marketplace business. They basically operate in 3 markets: Argentina, Brazil, and Mexico. These numbers are in constant currency, so we gotta look at them later, especially because of Argentina. Inflation there has been crazy in the last few years. It is now slowing down. I think this is already a big positive. Argentina has been mostly dragging the company down. I think with some of the reform of MELI working, inflation coming down, I think this will also long-term stabilize. But when we look at items sold, we can see 28% growth in Mexico, 32% growth in Brazil. Those are very solid numbers. Active buyers, quarter over quarter, slightly down, but you gotta remember, Q4 will always be the strongest when it comes to e-commerce. But year over year, fantastic growth, 16%. Now, when the second business, fintech, now just so you know what MercadoLibre really is, these translations are not 100%, this is just the Google Translate. Consumer, they have accounts for you, they have yield accounts, they have insurance, they have loans. For the business, they actually offer points of sale, so you know those little card reader things, they sell those. They also just offer, just like PayPal or any other thing, that you can pay with it online. It's very used in South America. And they also obviously finance businesses. They have consumer finance and business finance plus the credit cards. The fintech business is really fast growing. Monthly active users growing 38% year over year. Assets under management 19%. And here's also where the difference from free cash flow to earnings per share come in. The credit portfolio. We can see year over year they increased their credit portfolio by $1.4 billion. Now, of course, that costs investment, that is free cash flow that they're employing there. Now, where do they make most of their money? We can see commerce. Let's take Brazil, their biggest market, 1.5 billion commerce revenue, while the total fintech revenue is 1 billion. However, both are fastly growing. Now, Argentina was the only one that was down year over year just because of huge pesos devaluation. And now we can see their free cash flow. They made 1.5 billion in cash from operations, minus 148 million capital expenditures. Well, that leaves us with around 1.4 billion in free cash flow. What was most of this cash used for? Their loans. They're increasing their credit portfolio. Now, if they give out profitable loans, that means faster growth in the future. What if they're not profitable? Well, then this money is a write-off. However, let's look at the portfolio. You gotta remember, these past due rates, etc., are gonna be higher than we're used to from European countries or the US. Those are emerging markets. Incomes are not as stable. So, of course, also the credit default rate is gonna be higher, but in exchange, the interest rate charged on those is also higher. However, we can see their credit portfolio is improving in quality. When we look at the loans that have been 19 days past due, they went from 28% to 17.9% in 1 year. Yes, 15 to 90 days went up a bit, but as long as they get repaid eventually, we can see the long-term past due rates are coming down significantly. And I think that shows that, at least for now, their credit portfolio is remaining healthy, they're investing in good credit. I don't see any issues happening there. So now, when we look quarterly, we can see the operating cash flow exploding. However, not all of his free cash flow is free cash flow that can be paid out to the shareholders. Some of it has to be used for loans. We could see around 950 million was used to grow the loan book. They're currently in hyper growth mode, so I don't expect this to stay as high forever. Let's say if it's gonna be cut around 400 million. That combined with the capex means they get around $1 billion in free cash flow per quarter. Share-based compensation, not really high, it is growing, but those are very acceptable levels, so I don't really calculate them in. 1 billion in free cash flow per quarter, leave us to 4 billion in free cash flow per year after the loan book growth. Now that is around a 22 times multiple. Now when it comes to the growth rate. Historically, their low growth rates have been in the upper 20%. They have gone down to like 17% during some very bad times for the South American economies. But on average, I would say around 30%. Now, what are the risks here with Mercado Libre? 2 risks. They're operating in South America. Those countries are highly volatile, especially their economies. A lot of them are very reliant on commodities. But we can see the company hasn't been able to withstand those. Still growing in those times, in real terms. Now, what is the second risk? Of course, you have probably heard it if you looked at the company before, Amazon. However, Amazon is currently not succeeding in South America, and they're also not really focusing on it. And the longer Mercado Libre stays in the game, the more penetration they get, it's going to be harder and harder for Amazon to compete. As long as Amazon doesn't start ramping up in its investment by 100 or 200% within the next few years, you're not gonna see heavy competition in South America. Mercado Libre is establishing itself very much, so I see the Amazon risk as greatly overblown, especially with the fintech business getting bigger and bigger at Mercado Libre. But I also like the revenue growth is mostly organic. It is not through acquisitions. Sure, they have some acquisitions, but 50 million here and there, that is just not mentionable. Now, do I see the growth rate slowly coming down? Not really. they're still hiring a lot of people. They're intending to grow employees by 30%. They're also massively increasing the investments into Brazil. So just another reason for me to be bullish, especially because they have that cash, they're not diluting you or taking on debt. They're currently setting up everything for growth, and I think they need to grow in the next few years just to reach that capacity in South America, where basically no one can enter the market and compete with them. Now, when we look at it, we assume 4 billion as regular free cash flow per year. That will be around $80 per share. I want to be on the conservative side. I don't want to use for 30%. I want to go on the lower, maybe use 20% for the next 5 years. Now, there are no share buybacks in this. Dilution is very low. They're currently building even a cash reserve. And I think after 5 years, they're gonna start buying back some shares. Maybe not a lot, especially if the stock is gonna trade at very high multiples. But I think they're gonna start buying back some shares. Maybe 2% of shares. So this would be around 16% revenue growth, 2% share buybacks. 17 multiple, yes, it's a fast growing company, but it is in South America. There's still some risk with it. I think the Amazon risk will be gone by then though. That would give us an intrinsic value of $2,500 per share. Currently trading at $1,700. 46% discount. I think for those conservative assumptions, because these are really conservative, I think that's a buy. As a matter of fact, I'm going to start building a position. I'm not selling any position to buy into it, but whenever I get dividends or add cash in my portfolio, as long as the stock doesn't trade much higher, I think I will slowly start building up a position. Usually the best scenario is what I use for outlandish thought experiments, but I think these assumptions are not even that high. 25% growth rate for the next 5 years and 20% after that. Now, is that outrageous? No, I don't think so. They have very high growth rates right now, even with Argentina dragging the rest of the business down. And their lowest growth rates ever have been at around 20%. Plus, with Mercado Libre still being in growth mode, hiring 30% more workers, I don't see why this can't be achieved. So I feel very comfortable buying a position here. We talked about the loan risk. What if a lot of these loans are bad? Nearly half their free cash flow to $50 per share. 20% growth rate for the next 5 years. 15% afterwards. That will leave us with a present value of $1,200 a share. That is a decent downside, but I wouldn't say it's catastrophic. Especially because I don't see it going that bad. Their loan business is getting better and better over time. So I don't see why they would have to write off a huge chunk of this. Unless a major economic crisis happens in South America, which I don't see happening. So I'm building up a small position in Mercado Libre. I think the fintech business is very attractive. They're achieving very high penetration in a market that is not very heavily invested in right now by other companies. So I don't really see a lot of downsides with this company, especially at these multiples. What do you think about it? Write down below. Have a good day.